Going into Monday, Goldman Sachs just released some pretty influential news about how they see rate hikes being affected and where they're going into the beginning and ultimately middle of next year, specifically with the Fed talking on Wednesday. As we get into the S&P 500 as well, we can see on futures, you're at a massive level of supply. This is a big area of resistance, and I believe this week will be very influential. As well as targets, when we're looking at the S&P 500, I think we have to talk about some of these key levels in here as well and where we're going as far as the daily time right now. The daily 200 MA is sitting at about roughly 4,100. It'll probably scale down just a little bit, but we have to keep an eye on that if we start to break above this key range. I'm also going to talk about the Nasdaq and where we're going here as well. I don't believe it has as much room to the upside, but we're going to talk about where I see us going in the overall viewpoints of the news that are being pushed out as we speak. Now, I have to ask you to do two things before we go any further. Like and subscribe. It helps with the channel so much, and we're actually nearing it on 40K finally here on the channel, so I do appreciate all the love, all the support. Let's get into this. Now, there's a few things I want to cover as far as news first, and this is going to be the first one, and I'm going to give the big bulk of the video out first. Goldman Sachs sees Fed rates peaking at 5% in March. This was a pretty important statement and a pretty big statement. I've gone over where we're at on Fed rates overall right now. And I kind of misspoke on the last video when I was going into this. I just want to clarify. So the overall target for the end of the year was around, I believe, 4%. That was the goal for a while. Then they moved up to 4.25, then 4.5, and it's going further and further. So right now, they kind of see the ceiling of what they've set locally at around 4.5. And as we speak going into this, they're going to hit 4, and we're expecting, right? We're expecting a 75-point hike going into Wednesday, so from 3.2 to around 4.0 roughly. That's where we're going to be going. Now, the expectation is into the next one, going into December, the last hike of the year, and then going into February, and I believe March is going to be after that. And that's where the question entails. And so basically, if you haven't been following, JP Morgan and Goldman Sachs have been pretty big on recession concerns overall. Now, I'm going to go with some of the news that was released on Friday, and I didn't really highlight it, but I want to talk about it, how I think it directly applies here. But Goldman economists added that the journey to 5% hike includes increasing 75 BPS this week, 50 BPS in December, 25 in February and March, and then they think that would ultimately be it. Okay, the report also cited 3 reasons for expecting the Fed to go even beyond that, right? Going uncomfortably high inflation if it's still there, persisting. The need to cool the economy on fiscal tightening, and the price-adjusted incomes climb, which we're going to talk about here specifically, avoiding premature easing with the financial conditions. Now, this is a big statement right here, and I believe they're not going to have a premature loosening here just because of everything that's happened. I'll go on a little bit more of that in the video as well. Now, what I'm going to talk about is some of the things they're talking about here. The adjusted incomes are climbing still. This is a big statement. So there's 2 ways you can look at this. And they didn't talk about it in that. And I like to be very non-biased here. Even though I'm bearish here, I like to give you both viewpoints. So from Reuters, we can go over what happened here. So employment cost index did not rise from 1.3%, but it went to 1.2%. So that did drop a little bit. It still beat expectations overall. But where you're seeing cooling is in the private sector. So the private sector wage growth slowed considerably too. So that's important to realize. So private sector, you're seeing that go down, but you're not looking at the big bulk of America, which is the consumer. And this is the issue of where I believe this could become a pretty big problem. So if you go into what's happening here specifically, we have to talk about this chart right here. And if we look, this is basically since 2010, you've been rising. Basically, consumers are getting paid more money. And this is how the market goes back and forth because a lot steep decline, in the 2007, 2008 recession, right? And that's normally what happens with the recession is incomes start to drop to narrow out and level up the playing field there as far as cost. And right now, you're seeing a massive rise basically from the end of 2020 from 2.5% all the way up to 5.048. And this is a big demographic to look at here. And we're seeing this continue to rise. We haven't seen this roll over yet. And ultimately, this is what I've been talking about with income growth outpacing inflation. And even Biden made a comment on this in his speech. And he used it almost as a bullish thing for the economy, which is not smart, right? It's ridiculous. So this is a big issue overall with how we are rising and continue to rise. And this data did come out, so on Friday. That's a big issue. So when you look at this, you have to look at the cause for concern. And I believe this is what Goldman Sachs was talking about with adjusted incomes climbing, because you don't want to see companies continue to pay people more and raise their pay over and over and over, because costs will never drop across the board if that's the case, as long as demand is still there and they can still fulfill that and they can still buy those items, keeping the price high, right? That's a major cost and a major concern. We also have to recognize things that are going on in Russia are not slowing down either. That's still a major issue across the board. So these are all things I believe you have to be looking at and have to be concerned with in the market. So I do want to address that first. Also, I do think we need to be pretty vigilant of what's happening with oil, gas, and energy prices overall around the world. I think we can all agree that if we look at some of these, oil companies, they're still destroying right now. On the daily time frame, they're at all-time highs. Oxy, they're a little bit below, but they're looking like they're going to keep pushing. Overall, they're destroying. These are the best companies out there right now, are these oil companies. And I believe there's a logical reason behind that, which we've been covering here for so long. Now, oil prices are being suppressed here in the United States because of what they're doing with the reserves on those petroleum reserves. And even Putin, his crazy overall viewpoint that was coming from, this dictator point of view, highlighted that in his speech, is that what America is doing with their reserves and how they're kind of manipulating the system right now. And, there's a little bit of truth to what he is saying. So I want people to just understand that. And it's definitely being seen here by investors. And that's why they continue to buy these stocks over and over. And they're buying the tippity top as well. They're not just buying the dip. They're continuing to buy throughout the new, price discovery phase you're in. Now, as we look at indexes, again, this is going to be more of a broad viewpoint of what I want to look for as far as targets going into the week and as far as keeping your eyes open, right? So I do want to say on the ES, if you start to push up, I think there's a lot of areas we need to talk about. I'm just going to get a quick zoom out for you as well, so you can see how this lines up as well with the trend lines, right? And this is the AI trend. This is not me doing it. This is just overall, the AI doing it, right? So you can see you're obviously breaking out of these higher lows that these lower highs that you were making. That's important to realize as well. And you're at this demand. Now, I do have puts. I do have some short positions on Qs, right? I think that's just the safest position for myself when I'm looking at shorting, but I'm not overexposed right now. So I do think if we start to break above this, I can easily stop out. I won't be too hurt, but the reward potential here is just too high. And I'm going to talk about how I see Goldman affecting this as well. But if we start to break out, I just want to give you the bullish thesis at first, just so you know where I'm coming from. I want to go to the weekly as well. And I think this is the area you got to be watching, right? And so when we're looking here, I definitely want people to be vigilant of where we are. So remember the $4,100 level. So the $4,100 level is the area that is that 200 MA on the daily, right? I want to make sure that's known. And that's right around where this trend line is. And that's overall going back into December of last year. So I do want to address that would be my peak type area, if you will. I just want to make that known, coming right up into that $4,100 level. Now we can also see ES is bouncing on the 200 MA on the weekly. That's been a monstrous level. You can go all the way back to COVID and you can see how it respected it there. You dipped and then quickly remounted it within 2 days. That's important to realize also, but that's really important to see with how you're reacting to it right now. So going back to the daily, you can see where that level is, just to keep you honest. It's right there at the trend line. Makes logical sense. I could see that lining up if you get the breakout. So if you start breaking above locally 39.40 on ES, I'd be targeting 4,100 roughly, just to top off that trend. Now in Q, I do believe this is where you're lackluster, and I don't think the charts are aligned right now. So going to the weekly, for instance, it's possible. It's 100%. I think you have to say it's possible. I guess you get a retest of 12.7. I just don't see that happening personally, or even 12.8. I don't see that happening. That's way too high. I think we would see tech have a monstrous boom. I don't think we've had earnings to justify that either. And then as well as the deceleration coming with majority of those companies as well, going into the end of the year, going into holiday season at that as well. That has to be a cause for concern. You can also see you're below the 90 MA on this as well, which is not too big of a level, but I do want to highlight that is where you are right now. Now, going back to the trends, you can also see that you are on top of that weekly 200 MA. This has been a monstrous level, specifically on the ES, but I do think, it's holding that level as well here. And you can see how you respected it to the T back with the COVID dip, right? Literally to the T, you bounce right off it. So I do want people to be watching these, and I don't always do the broad viewpoint of the market, but I definitely want to make sure people are understanding where we're at and logical reasons why I see, if we do continue to move up, where I see us going. And a big question here is people saying, Tyler, are you Are you leaning this way or that way? I do lean towards the downside. I want people to understand that, right? I'm looking where we're at. We're clearly at a supply level. You have about 100 points, maybe 150 to the upside potential still before you get out of resistance. And at that point, you still have to look at 12.1. You still have to look at, 12.7's there. It is possible, but I just don't see it happening right now with the way we're moving. And in comparison, you can also see that NQ is definitely lagging behind ES, in my opinion. I think it's clear as day where you are. You're lagging behind, and it doesn't have the same overall strength as ES and Dow. I think Nasdaq and Tech are being exposed where we're at. And if you look at the daily, you can see that this recovery is nowhere near the same as the others. Now, you could say this is a lagger, whatever you want. I don't care. Do whatever you got to do. But you can see Dow still kind of in the trenches, and ES really getting a nice bounce out of here so far. You can go look at Dow if you want as well. So that's what I'm looking at overall, and that's kind of my movement and what I'm looking at. And this is going to be Dow just so you can see as well. You can see Dow really performing so far. Look at that bounce out of here. Monstrous bounce in comparison. I mean, you're not back to all-time highs on Dow, but you definitely made a bigger move than the others. So I just want that to be known. And this is heavily from earnings. Go look at Caterpillar, go look at Boeing, go look at Lockheed Martin, go look at RTX. They all destroyed, and this had reason behind it. I do believe Dow has logical reason to be up. That's where money feels the safest because those companies continue to torch and do very well. And you have to keep that on your radar. But for me right now, I think that tech is just, there's cause for concern here. I think people have to be, specifically with the ongoing viewpoints. Now, going back to the Fed, I do want to address this. People want to say, well, Tyler, how do you think this is going to affect the overall movement on the market, going into this meeting? Now, I believe personally, if the Fed does say that they're looking to, raise that ceiling up to 5% from 4.5%, I don't think that's a good look. I think that's a bearish overall statement. Now, the pivot talk is the biggest question of concern. And so far, I don't think we have seen a reason for this pivot talk. I also don't think the Fed wants to give false hope or act too early. And when I say act too early, going back to, previous statements from the Wall Street Journal post, this was a really important thing as well. And it's important to realize that the Wall Street Journal is a little bit counterintuitive with some of their posts. So they're the first people to talk about the pivot. And then now they're talking about how the keeping pressure on inflation is still there with wage growth as well. And these are good points to mention, but you have to realize that they're going to be spinning both sides of the page. So either way that they can thrive, because that's their business model. You have to understand that. So when I'm looking at this, I'm taking it with a grain of salt. I'm not going too far with it, but it's important to see that they are showing you the facts and they are showing you the dangers of what's happening. And, we're not just saying crazy stuff here on the channel, that these are big viewpoints and they're not getting fixed yet. Okay. They're not being resolved. Inflation is still sky high. And if we look at the reasons for, what's happening with supply chain, none of those issues have been resolved. And it doesn't look like they're going to be resolved anytime soon right now, specifically with China, Ukraine, Russia, oil and gas, etc. So none of those look to be resolved anytime soon. So that's the big concern here. That's what I'm looking at. And that's how I'm kind of looking at the market going into this week. I am not looking at it from a viewpoint that I think that you have to go anywhere. I believe we've seen the Fed talk about all types of things. We've seen them kind of change their stance. We've seen them say big surprises on the market. So I think you need to be a little bit patient. But once the Fed gives us their viewpoint, I believe that's going to pivot and move the market in a general direction, most likely for the next 2 to 3 weeks. Now, when I say pivot, does that mean that we're going to go up? That does not mean that, right? I think we're going to get a clear direction. So we're either going to get a clear direction back towards the downside or we're going to get a clear direction back towards the upside. And I do believe if it does go towards the upside, chances are we sit in an upside trend longer than we would with a downside trend, right? Because I do believe we're getting closer towards those targets. If you go back out to the weekly as well here, you need to understand where we're at and where we're overall aiming to go, right? The overall target has been for me the entire time pre-COVID highs. That's been the range, right? Back down to February 17th roughly. That's been the target range what we're looking for. Going over to ES, we got kind of close there, the pink line right here. But overall, we haven't still tested that range. We are in big support, so we can see where we're at. The only one that has been to that level was Dow. And I will say the road to get there was much easier in comparison because Dow did not run nearly as much in 2020 through 2022 as ES and as Nasdaq did. We all know what carried the market during that time, and it was tech. That's the big viewpoint, and that's the big statement that really no one's talking about here and clarifying where we're at. So again, right now, I want to be very clear. My viewpoint, what I do have puts on Qs. That's my real only position right now. And I'm being a little bit careful here, right? I'm not going into this blind. I am vigilant of where we are. And if you look here, you can still see we are operating in this supply. This is our clear cut range of where we are. And we have not broken out of this. You can actually see we got a little bit of a wick through. So possibly invalidated there. But you need to just watch out where we are. And ultimately, can we get back above 284? Because if you do, then you have some range back towards the upside, and you have to be vigilant of where you are. SPY max upside, I didn't go over that yet, and just want to make sure this is really clear as well. I think you got to be looking towards closely the 403 level, and then after that, obviously back to the 411, 412 range. If you can get above these key ranges. If you start breaking above 390, I think you have to be a big bull going into next week. That's the big range you got to watch. 390, 391. After that, I definitely think you have legs to continue going. That's my viewpoint. I'll give an overall breakdown of stocks I'm liking tomorrow, so make sure you check it out. I'll see you guys later.